Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Elconin, along with Brianna Velasky, and we have Tommy Lackey Jr. on the line. He's founding partner and CIO of Barber Lackey Financial Group. Tommy, how you doing this morning?
Doing great, guys. How are y'all doing today?
We're doing good. Well, we got some excitement this week. We have the Fed meeting today. We had Quad Witch on Friday. Do you pay attention to these things, or do you just trade what your scans are telling you to trade?
Well, you pay attention to what you can, but you also have to just kind of figure out over time how you factor it in. And the big thing about quad witchings to me is they just can increase volatility throughout the week. And so it does two things. One, it means you probably want wider stops. And two, if you do get a real extreme swing one way or the other, you might want to take advantage of that because chances are it'll get pulled back in.
Okay. All right. So let's go to, well, first let's talk about your nitrous scan here. And I know you don't want to give away your secret sauce here, but it's something you've been working on for a while. Why don't you tell us about your the nitrous scan, how it evolved, and how you use it?
Okay. Well, the nitrous scan came from my studies with Andrew Cardwell, who is pretty much the authority on RSI. And so I studied with him over the years, and he had one thing he taught me, which was he uses moving averages on the RSI. And he mentioned one time that basically when the 9 SMA, or the 9 simple moving average of the 14 period RSI moves above 60, then you have a really strong move going on. And a lot of times the RSI itself will be 65, 70, even higher than that. And usually that scares people away. That tells them, wait a minute, we're overbought. People who use it on the very simplistic overbought oversold standpoint get very afraid of that. But studying a lot of those charts has shown me that actually that can be an acceleration point, that it's really starting to kick in. Now, sure, some of them are extended, but a lot of times they're just moving out of bases or breakouts or things like that. And so that's where I came up with the nitrous scan. It's just kind of like nitrous oxide in a car, if you're a car guy at all, which I am, which is basically a way you can pretty much juice your car no matter what it is. Sometimes it's not helpful, but you can hit a button and all of a sudden you have 50, 60, 70 more horsepower. And that's the theory behind this, is that once that gets over 60, you ought to be watching for that move to keep going, even if it already looks pretty impressive.
Okay, so let's move to the nitrous scan for today. And you have some movers on here, some ones that we're pretty familiar with. So let's just go to the solar sector here. Dennis was dabbling in First Solar a little bit, got scared at a double top yesterday. But Solar City, let's talk about that stock and
Mm-hmm.
what your potential trading setup is.
Well, see, that's a perfect example right there in Solar City, is that it's not a stock that extended or anything like that, but the RSI has improved enough that it's now in a position to where you're starting to see the potential for a reversal and a acceleration here. Wait, solar. And so when I look at that, hang on, let me get one quick place because I want to make sure we're both on the same page.
I got
Um,
I got the daily up. If you want me to go to a weekly or monthly or
No, the
intraday.
daily's fine, but actually, this is not from the Nitro scan. Solar City was actually from the RS scan, but
Okay.
that's okay. We can still talk the chart. Basically, I like it based because of the reversal. It based here for 3 or 4 days, and an interesting spot was back at that gap close from February. And I know the gap has already been closed and all that, but sometimes those gaps, the theory there lingers around. Even once it's already closed, it can stay an important area for a little while. And we went sideways for 4 days, and now we're moving back above that range. So yeah, I think up to the middle Bollinger Band around 59 or 58.98 right now. At a minimum, if it clears that, you're also back above the previous breakout point, which pretty much opens it up
Eh,
to move back up in that 70 level.
So is this something you're already in, or you're looking to
No,
enter, or okay, okay,
no, I'm looking at it, but I'm in solars in general.
okay,
I've been in them for about 5 or 6 months. Uh, Back when they were about to break down, and the breakdown failed. Um, and so I've been in them since then on an ETF stance, but I have not worried about this.
okay.
And
Yeah, DTF, you get the broad exposure, and it's just not one specific. Uh, just commenting on this solar here. I've been reading a lot about in Barron's about the Chinese solar company
Uh-huh.
that was a lot of indexers had buy into because of its
Yep.
market cap here. You think that would be a little reason for the drag on the Guggenheim Solar ETF here? I see that big red bar last week. I think
Oh yeah.
did
That was
that company lose like $40 billion in market cap in like a trading session or something
yeah.
crazy like that?
That was a crazy scenario. I'm not a big fan of that. It uh, it pulled it off, but the way it pulled it off, I kind of looked to see where it stabilized, and then made some adjustments from there. But I was in a good bit lower than that, where it came off to, so I wasn't as worried about the short term. I think we'll see where that plays out, but that was a crazy situation, and yes, the company itself is a problem. Now the other scenario is that's we're right now getting near where that's going to be rebalanced. The fund itself should be rebalanced here soon, I think the end of the quarter. And so that's going to take that fund's prominence out a good bit. I mean, it was still a big holding even after the 40% drop. And so it'll take that prominence out. And I think that's an issue you do run into with ETFs, as with anything. But I think I would rather take the chance of something like that happening over the individual company risk in a lot of these situations because, solar's still such a nation industry and they're still having a hard time actually making money. So, and making a product that's really useful. And so I think it's a scenario to where playing the whole field is just still a safer bet, even when you have situations like that.
Okay, another one here from your RIS scan, and there's been a lot of news on this one. CTSX. I get
Mhm.
they get a letter from the Elliott Company saying, "Oh, well, if you listen to us, your stock would be $100." And it's had some moves, it's had some gaps, not filling the gap here. Not a big fan of these activist letters here. What are you looking at CTSX?
Yeah, I think it's a scenario to where it just recently broken back into a bull range on the weekly in an RSI, and it held up okay even when it pulled back. I think where you're at with this one is you got to see how this kind of plays back. I agree with you; it's not filling the gap, and so someone could come in around here and then try to put a stop below the low of the gap day. If you wanted to try to get in on the early side, but really, if you look where it stopped on the top side, that's a pretty decent sized breakout if it can go, and so on the weekly chart. But, either way, you've already broken the weekly triangle that goes back to 2011 or
Okay.
2012. So you're breaking a huge pattern. It still may take some time to consolidate out of this scenario, but it does definitely look like it's shaping up.
Okay, let's go to a few. Now, is this from the nitrous scan here? I'm looking at NCR and
Yes.
MTB. Okay, let's go to the nitrous scan. Now, are these day trades or these swing trades, or how can people, if they're interested in using this information, how long of a time frame do you need to look at this?
Well, see, and that's another thing. I don't make that judgment for any of my scans personally, because I believe that it's really all about looking and finding a setup that looks good, and then trading your style on it. There's a lot of people who will trade these just for the scalp or for the pre-breakout or anything of that sort. If we look at the nitrous scan example on there today that looks pretty extended at the moment is fresh FRSH, but it's got a huge volume coming out of this recent breakout. So you may not buy it today, but you might keep an eye on it.
Wow,
However,
wow,
like I
you,
said
ooh,
again, with the nitrous, a lot of times you'll be really surprised that even though it looks this extended, sometimes they do keep going. So it just depends on your time frame on whether you want to play it now or wait for a pullback. But with 25% short interest and a move like that, I mean, you definitely can. I mean, heck, if nothing else, you could put a straddle on it
okay, yeah, boy,
and
what
do
a
something
nice,
like that.
yeah, what a nice move here. How
So
about
you have that. I'm sorry. Go ahead.
No, I was just gonna go into Domino's Pizza here. Boy, this stock is just. I've been watching this for the last few years and wishing I kept buying it. What's your outlook on DPZ, Domino's Pizza?
Well, Tim, I think that was actually the one I was going to go to next because it's a good example of another look you get from this same scan. Here's one that looks like it's moved sideways for a while. It's definitely in a almost a small cup and handle pattern after gapping up there, and so you're now in a situation to where if this handle can work its way out, you got a great setup. Again, not I don't think anything. I think you should look at any chart and say, okay, it either has to be bought today or not. There's just too much in there and too many different opportunities you see out here in a lot of these different plays. Like example here, another one on the nitrous scan, which is not really usually a fast mover, is MTB. It's a regional bank,
Mm-hmm.
$16 billion bank, and it's right there at the highs again in the 126 area, looking like it's about ready to go. And this is for those people who want something more stable, thing like that. But you still got a 10% short float in this thing. I mean, that's awesome to get a regional bank in a hot sector right near a small breakout point on the daily that puts it up at weekly highs and looks like all-time highs are close, maybe not all-time. I know
Yeah,
my
no, that's
chart's
that's
not scanned as
interesting.
much.
Going
So
back
you
going back to
holy
that other chart that you had there, we were looking at the DP, was it the DPZ?
uh-huh.
Or what was the one that we had before that?
Oh, oh crud. That was the
No,
Fresh
this is what I
FRSH.
yeah, this is what I like for me. My style is a little bit more like buying it here and then blowing out here if it gets under 110 just for some reason, and I know it's the way people make a lot of money as opposed to buying the breakouts hard. I just feel like, man, I'm the last one in the pool on this one, but
Mhm.
you can use a tight stop, but I like that that you're using the short interest as well, to keep an eye on. The shorts have to cover. The higher it goes, the more pain that's inflicted.
Well,
Moving on
well,
here,
but on
some losers.
DPZ real quick, think about that though. I'm with you, is I think you can go either side. And that's why I think you have a range or you have a place on either side. I agree with you to either buy it here. Actually, I would prefer to let it pull down to the bottom rail of that triangle closer to, 210-ish, little below that, and see if it starts getting some action. If it gets some reversal action there, I'd rather go ahead and buy it there because I'm so close to my stop.
Okay, so you were looking to go both ways in that trade. That's nimble. That's a sign of a good trader, good investor. You also have, going back to the RSI scan, you also have some losers here.
Hmm.
So you go long and you go short, I assume. So, boy, what a troubled sector here, the 3D printing sector. Oh boy, oh boy, oh boy. Is this just another consolidation for another breakdown here?
This chart X1 especially is one of the ones that has just it started draining a good bit before the other ones, before Stratasys or Triple D started. It was draining before that. To me, yeah, I would have a hard time betting on this thing on the upside until there was at least some kind of news in the industry. But it's just an ugly chart. I mean, there's nothing you can say there. So yeah, I'd say probably so. I'd bet more on the break below 1180-ish than I would on the break above 1350-ish. But just to close this gap, there's too much risk there to worry about even playing that. You really got to get over that 1350-ish before it even remotely
Okay.
looks interesting.
Another one you had on your losers. This is an
Sorry.
interesting one here. Uh, Biomarin Pharmaceuticals. I mean, it's always hard to be short these pharma stocks here, but boy, this one, I don't know. I'm going to do the air math here. You had your run up. Here, let me get it up on my other chart so I'm not too off base here. But you had a nice run up from the, what is it, the 110 level here. Had a nice run up from 110.50, failed at the high of the move here. It looks like you're just chopping around like mid range of this whole time here. Boy, if this thing can't get bust out here over 124, boy, this thing could be in a heap of trouble.
Agreed. I mean, it's one of those things to where it definitely can get down to the 112, 111, 112 area if it loses this. You got an MA, the 150 MA or 100 MA in there at about 115. But if it loses that 110 level, you don't really have a whole lot to catch it down until around 90. Maybe 100 just because it's a good round number, but 90 to 100, and that's a long way down. And especially for, again, an industry that's still been pretty solid, but it just doesn't seem to have been participating recently.
Yeah, that's one that maybe playing the options market in it or something because the drug trials and whatnot can be pretty tricky. Another one here, another. Let's talk about a couple other losers here. We always talk about stocks going up. We don't talk about them going down that much. DGX, is that Quest Diagnostics?
Hmm.
Oh,
You know that
What's going on here?
who knows, but basically, that was a great play into last fall into the first of this year. And then it had that big spike up on whatever that news was, and just the fade that went on there was just atrocious.
What was
So
that spike in DGX here going back to was there a takeout? Did someone want to take them?
I can't remember if it was a takeout or if it was I don't remember, but it was something in that. It was definitely a merger or some type of event, financial event. But yeah, and then it just got ridiculously faded. I mean, even that day. I mean, you just look from that very day, and then from then on, just could not get anything going. So I really don't know how I'd want to play this right here because see the RSI is just now back to 40, so and the weekly is still in a bull range too. So theoretically, if it can stop around here and turn, then you probably got a decent play because it was a solid company and a solid trend before all that happened anyway, and it actually is still holding the longer term trim. They just basically milked that spike for everything they could.
Yeah, the news was unconfirmed chatter. Quest Diagnostics has hired Goldman Sachs to explore sale. I mean, next time, it should be explore selling your stock because look at that. The spike that you got up in that. Same thing happened to poor old Humana here. They were the ones that were exploring the sale.
Hmm.
They spiked up and now they're back down here. So using the news here, not always the way it should be interpreted. That stock spiked up and now it's well back under 200, maybe heading back to where it was before that news broke at the 180 level. Tommy,
Yeah,
we
but
got
I'd watch Humana. I'd watch that one because it's in a very hot industry with a lot of merger activity. So I'd be real. I'd watch that one and see kind of how it acts, and maybe look at some retracement levels to see. Now, these last 2 days of volume have been pretty darn heavy, so you could be right. But if it holds, or if they start pulling from here, I might keep an eye on that one since the industry has been so strong.
Yeah, Dennis and I mentioned that. I mean, especially if this came back down into the 185 level, I wouldn't even
Hmm.
need to be real picky because it happened intraday, so there's really not a gap in trading. But yeah, I mean, just do it. Put it on your radar, put it on the back burner. Maybe some. If it gets down to 180, you could probably go out to September or December and get some pretty cheap $200
Oh yeah.
calls or something like that. So interesting scenario in that. All right, just final advice, for our traders, investors for the remainder of the week. You touched on it briefly about maybe having to widen your parameters a little bit going into the heightened
Yeah. I
volatility.
mean, Yeah, I mean, if you're not nimble or you aren't willing to widen your parameters, you might want to just lay low for the week. But I think people right here need to be much more careful or not careful in general, but careful about getting too bearish too quick. I've made a couple tweets the last couple of days to where we came into this week and everybody thought that we were starting the new bear market. Shh, shh.
It
Sorry about
sounds
that.
like a
Thought
dog
we were starting the
market.
new bear market. They are. Shh.
It's a dog
And
market.
so we thought that basically everybody was talking about a new correction, a new bear market, any of that stuff. And I pretty much said, let's get through the first 2 to 3% or 3 to 4% down before we start talking 20%.
Yeah.
And I think that's an important factor people aren't doing right now. The breadth. Okay, I'm sorry, guys. I apologize. I'll say that. Let's just say this: the breadth is not bad enough to be calling bear markets yet. If it weakens more, great. But for now, I would kind of stick with and look for your opportunities.
All right, Tommy Lackey Jr., founding partner and CIO of Barber Lackey Financial Group, talking his scans, RSI, and the markets in general. Tommy, a pleasure as always. We hope to talk to you again soon, and thanks for participating in the chat on a daily basis.
Thank you guys very much. And again, I apologize for the dogs there. Have a great